Hey guys, Eagle Trading checking in Saturday, March 21st, 2020. Putting together a game plan for next week, and the strategy is simple. If we go up, we are going to do A. If we go down, we're going to do B. This weekend I'll bang out some videos on why I think the market was trying to form a bottom. I don't know if we're going to have a little bit of a bear trap here. Obviously, news pending. We did break through my long-term channel line at the close. I did not like the close Friday at all. It could be a nasty open Monday, or like I said, it could be a bear trap reversal. I don't really know. The evidence points to the prior, not the latter, unfortunately. But we will see. I'll explain why I thought that volatility was going down, even though the market was tanking pretty badly. And like I said, it looked like over the last 5 days we were trying to stabilize and form a short-term bottom. A lot of things were giving me that inclination that we were going to try to rebound a little bit, and I can go into details, whether it be the canaries in the coal mine, some of the strong stocks breaking out of their 4-day pattern to the upside. It was short-lived. It's all about energy and time here. And I'll also show you historically, have we ever seen this type of a pattern formation prior to a reversal? That'll be in my next video. But for right now, the game plan's simple. I'm going to bang out some videos on specific charts and stocks that we want to look at certain areas. I want to talk about where we want to be long volatility. I'm going to show you a UVXY chart, and we're going to start with the Dow Jones Industrial Average, and then we'll go to the S&P 500 in the next video real quick. Here's our trend line from our epicenter. There's two areas that I kind of like. I like, obviously, this candle here from the descending top line where everything kind of took off, retested, and started from there. They're almost in line with each other. But on the Dow, I want to look for areas of reversal short term here. So where are my areas, and where did we draw the Fibonacci from? I drew the Fibonacci from this area of consolidation where we did retest and reverse. I kind of caught the bottom of that candle, and I wanted to see how accurate it was. If we go macro to micro, looking at different areas, and it seemed to be pretty good. Obviously, we have a touch there, reversal. Like I said, you can push through areas of energy. They kind of want to gravitate towards there. So I kind of liked what I saw, using that as our lower Fibonacci number. And over the longer period, you could see this stretch over, and it couldn't hold it, and then pull all the way back down to the trend line and the Fibonacci 61.8% retracement. Obviously, we need this history behind us to draw these Fibonacci lines. Then back up, retest, stretched over, pulled back, but the energy was still to the upside, so it couldn't pull back and touch. We're still on an upward trend on the fibs, and then hitting the all-time high. We tagged this area, and we pushed through. Obviously, that was a few days ago. Broke this longer-term trend line. Not the really long-term trend line that I have back from, I believe it was 2008, but this is the one from 2015, and we are just pulling away. I also want to try to take a look and see if this trend line gives me a mirror image top to bottom here of the stretch point. You know, is it commensurate, like we've talked about before? So we might run a fib from there up and see where that lands. That'll be in the next video. But for now, let's look at these numbers. Here's where we want to go long at. The lower pivot here, we want to go long at the 17,880-ish area. That's where we want to be long the Home Depots and stuff like that. I went by Home Depot parking lot, and it was packed. Obviously, people are going to be at home. We want to short volatility if the timing is right in these specific areas. If now we bounce back up to the 2191 on the 61.8, that's where we want to look to go short. So we have a couple different scenarios in mind. We can also consolidate them, shorten these time frames, and look a little bit of a tighter area, you know, where we want to short at. So we're going to have a game plan set up based on those numbers Monday morning. We'll also do the same with the S&P 500, and we'll look at some specific stocks that I like for rebounds, regardless of which way the market is moving. So those are our numbers for now. 17,185-ish. We can always push through. We can always fall short, depending on the energy and the psychology of the market at that point. But we're busting through this line here, no doubt. And we're heading into this area here. Look at this big volume, huge increase in volume here. And it's kind of like right where we're at now. So this is going to be really interesting Monday, you know, where we start out at and where we end up at. That's going to give us a lot of information on where this thing's going. Unfortunately, I think we're going a lot lower in the long run. But let's have a game plan if A happens, then we're doing this. If B happens, then we're doing this, and we'll go from there. But keep track of these numbers, and then obviously we'll bring out some more videos this weekend and explanations of why I think we're going low or what the numbers we're looking at and some individual stock charts.